What's up, traders? Today I'm going to give you a high probability way of understanding where the market is headed in the following session. We're going to be talking about the next session trading model today in futures, and this can be used for any asset realistically. Specifically around the futures market is what I'm going to be showing you today. So there's going to be many cases where we might have a huge sell-off, a huge rip on the overnight session, and the next session traders want to either fade it or they want to continue on with the trend expecting more or a large reversal. Now, these are just speculative guesses. I want to show you today how to exactly understand where we're most likely headed into the market and into the day. Now, bias is a form of conviction that everyone should have in their trading. That doesn't mean that it has to be live and die by this bias. It should be malleable because we do get new information. So let's jump right into it and understand market directionality and the next trading session model that I have in place for you guys. So let's do it right after this intro. There are three different chart tools that we're going to use. This is on Sierra charts, but you can use them realistically in any platform that you're trading. But they're going to involve a cumulative, a large volume profile. I use a 200-day profile. It is the gray profile on both of these charts that you see on the screens on the right-hand side. Number two, we're going to be using a weekly volume profile, suggesting that each profile, the one on the left here on the screen, is its own week, right? Or the one that you see here in between is going to be its own week. And then a session volume profile, which is what we have here on the right-hand side. And this is where we're going to tie things together. Now, I'm going to also be talking about how to bring more order flow into the mix a little later on, where we're going to be talking about delta profiles and the accumulation of delta to help clear the idea of direction up. First, I want to talk about what really defines directionality in the market. What gives away market direction? I use auction theory as my understanding of how markets move, and markets move based on balanced areas or distributions. The general idea is if we move into a distribution, the direction that leads price into that distribution is the same direction it's expected to stay or hold within. This goes for movement and market movement outside of balances. So what does all of that mean? Now, if I look at this tool, the first thing that we're going to be using here is going to be the 200-day or whatever large volume profile session that you have. For instance, this whole area is what we call a balance, right? This is a general distribution. It's a balance. It's an area that has a belly of volume. Now, in terms of directionality, market direction is generally seen as the movement in and around these kinds of distributions, these larger distributions. That's why I use a cumulative profile, meaning if we move within a larger distribution, the expectation is for price to continue the direction within that distribution. Why is that? These are areas of very, very heavy volume, meaning that they pretty much trap prices within. Price wants to remain in an area of congested volume. So if we have the ability to move in such an area, we want to stay within that area. And the general understanding is that we would move, right, from the direction that it came from, meaning if we move from above into it, I would be looking to sell rallies within this distribution. Now, such is the case if we move into the distribution from below, I'll be more so looking to buy dips into it. Now, this is malleable in different ways. If I have a move that goes outside of a larger distribution, that means we escape that balance, and the idea is to hold that balance to continue that upside momentum. This is just general market structure and the movement of markets based on auctions. Why? Because volume tends to lead price, so I want to understand how the volume is shaping up. So I can look at this in terms of the larger distributions that we have here on the 200-day profile, right, which give me a good idea of what's going on and where prices are in relation to these distributions. For instance, if we have this kind of distribution and distributions below, and we continuously fall through these distributions, right, the idea is that we want to see markets continuously move lower. Now, we can add another component to this, which is going to be the weekly chart. The weekly chart over here just helps me identify what's going on the 200-day chart a little more. Here we have balances, right? We have balances and imbalanced areas. The imbalanced areas are generally going to be these red extended low volume regions, while the balanced areas are going to be the areas that accumulate a lot more volume. So I can use this in cohesion, right, with the larger 200-day profile to understand to give me a better understanding of where the larger distributions are realistically. So if I'm in both the balance for the week and the major balance of the 200-day profile, I would want to remain in that area and understand that realistically, when we move into and through those areas, I have a directional bias either to the upside or the downside. Now, it gets a little more convoluted when we start adding a bunch of these areas, right? When we have a bunch of different distributions. So another component to this, to get a better understanding of the directional bias, because you can look at this and say, okay, well, we've moved into this distribution, we have to stay bullish or bearish. But there's a little more. The next factor is the closing print of the prior session. So if I'm trading the RTH or the New York session that's to come, I'm very interested in looking at the closing print of the overnight session and how the overnight session moves in relation to the larger balances and where does it actually close. So if I look at this a little more deeply, here in the most recent instance, we have this massive down day to start the week. So this massive down day to start the week, a lot of people might be trying to fade it, buy it, or they might be trying to sell rallies to continue that movement. But if I have a good understanding of where prices are going to close on the extended hours trading session, I then have a better understanding of what directional bias I can take. So let's dive into this when it comes to the daily session profiles. So if I look at what's going on, I have this very, very thick, large distribution that's at play over here between 59.90 and to the downside around 59.20. After that, we get a little convoluted and there's not really too much information. If I'm looking at the S&P 500 here in this instance, I'm looking at distributions that are like 30, 40 plus points, right? So they have a pretty big gap of points in their direction. So these little distributions here, 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 I don't really want to consider them as individuals just yet. I understand that there are levels in between where volume does drop off, so I can draw them out like this and say, okay, these are little minor distributions. But I'm mainly focused on the big juicy distributions that we have. So if we look at this from the perspective of direction, right, on the overnight, I not only want to see where prices close, but how did they get to that point and what happened? Because if I look at this, directionality tells me that when we move down and we gap lower back within this distribution under 6,100 on the S&P, that gives me a bearish bias, right? When we leave that distribution, that exceeds the bearish bias and gives me more bearish bias. Eventually, prices topple under 59.90 and we move into this larger distribution to the downside, this massive balance. When we move into such an area, prices want to remain in that area. However, if I look at the closing print on the overnight session, we actually close above the area. So what that tells me is it gives me the bias to look at this from the perspective that, you know what, I want to buy into the area that we just left, right? So that I can continue this momentum to the upside. So from a directional perspective, what I'm looking at is we made a move lower here, right? We made a move back outside of the balance and then we closed outside of the balance. So on the next session, honestly, I'm going to look for some kind of bullish bias, whether it's at the top of the prior distribution or when we move above these minor areas over here, for example, the 60-10s, so we can get that continuation and continue moving throughout the session to the upside swing. Now on this session, right, perhaps on tonight's overnight, what happens is prices might move into here, and if we close down here, then I start to get bearish on the following session. So this way I can combine the balances along with the opening and closing prints and even the weekly profile to give me a better understanding of what's going on. We're closing, or we're trying to close above the current week's balance, right, that's being created as is, and that should give me more momentum to the bull side. So I want to continuously look for that buy side momentum going into the overnight. Now, what happens from there? That's a very different question. I could also add the idea of delta into this. So the order flow concept of delta really gives me a good, I guess, confirmation and confluence to a degree of if we're going to actually hold out bullish versus bearish. So if I have the delta profile here beside me, what this tells me is I have clusters of specific delta around. Now, clustering of delta at specific regions like this, right, we have very heavy negative delta. If prices move above that, we can understand that those traders are most likely stuck into those lows and we're getting liquidity sweeps back above them, right? So that means that these guys have tried and tried and tried, but we've moved back above this area. Realistically, on the close above that area, we should hold out the bull side. Likewise, you have a lot of aggressive buying over here. So when I get the accumulation of delta on an overnight session that coincides with the larger balances that I'm looking at, I can lean on those areas to tell me, okay, directionality realistically is to the upside for today, because these guys are getting super trapped into that low area, right? So if they're getting super trapped, we're above them. We're trying to move above the heavy buying that happened on the delta session, right? What I'm trying to look at from that perspective is a combination of the massive distribution that we have, as well as the delta, to give me more confidence that, you know what, I want to be a buyer. Where can I be a buyer on this session? I know that as long as we stay above the 59.90 distribution balance top of this larger area, I want to be a buyer. If we move over the 60.10 area, right, where the prior overnight session balance starts, right, I want to be a buyer. So I can look at this from the perspective that I've cleaned up my understanding of where directionality should hold. And if I'm looking at what I wanted to do throughout the day over here on the S&P, right, I'm looking to hold this area around the 60.10 area, where the accumulation above these balances comes out. And on that session profile, I get even more delta to help me out and say, you know what, this is a good area to buy. Start buying this region, start buying this region. You want to be long, right? There is the momentum and notion for the long side. So if I combine all of these things and I wrap everything up, what I'm looking at is understanding first and foremost where the large cumulative balances are. And then I can get a little more information from the weekly chart. But what I'm focused on is the closing prints from the prior session, so I can get a better understanding of the next trading session's direction. So this is a fantastic tool on any given day to help you create your trade plan and get a better understanding of what kind of bias you want to take. Now, you don't live and die by the bias, because yeah, I do want to be bullish above 59.90. My expectations are for prices to go up from there. But if we fail and drop back down below into that area, well, you know what happens? You start seeing a larger reversal in prices. We can take any example in this criteria and try to break this down. If we look at this overnight session right here, what we have is a pretty strong move to the downside, right? We fail to move into this balance lower, and then we move back up into this area right here, just below this major balance. So the way I'm looking at this is, okay, well, we have this minor area over here that sticks out, and we've leapfrogged back above all of these minor balances, and we failed to move lower. That tells me that if we open above this area, I have a bullish bias right now, and my expectations for prices to actually move into this next distribution, right? Even from this distribution, if I'm looking at it, we make a move within, and then we actually close below, so that gives me the bearish bias of the overnight. And I can flip back and forth, depending on how we move through the balances and where we close. So this is a fantastic tool to help you really understand where the market is expected to go, rather than trying to look at it from the perspective of, oh, we've rallied too much, or we've sold off too much, we have to fade it, or we want to continue the move, right? This is something great that I think everyone should look into, especially if you're an auction market theory trader. If you want to learn more about Delta, let me know down below. We'll talk about Delta profiles in a different video, but I want to thank you all for watching, and I'll see you guys on the other side. Remember to check out community.tradeproacademy.com for our open Discord, and don't forget to hit that subscribe button if you're new and smash that like button.